the World Bank is doing some great stuff in the context of India. It has pledged a lot of money in the past also, and now specifically for MSMEs, understanding the importance of MSME in this country, the World Bank has approved $750 million fund to support the COVID-hit MSMEs in this country. They say that this will address the immediate liquidity and credit needs of 1.5 million viable MSMEs in this country. It will help MSMEs fight impact of COVID, protect millions of jobs, and the World Bank also says that MSME sector is central to India's growth and job creation. So if we can fix in the backdrop of COVID-19 the MSME sector, we will be successful in stabilizing our economy. If you hear the government, there is a lot of thrust on the MSME sector. 3 lakh crore rupees worth extra loans being granted to the MSME. We have joining us right now the country head of the World Bank, country director of World Bank in India, Junaid Ahmad. Junaid, good to have you back on the show. I wanted to ask you, Junaid, importance of MSME. Do you think that the government too realizes that if you have to revive the economy, this is something you need to fix first, top priority?
Absolutely, but Sanket, just as a reminder to you and the audience, that there's a logic to how we arrive at the MSME story. It's a health shock pandemic. Immediate reaction was to engage in health. But the particular aspect of health engagement was a purposeful slowdown of the economy because of the lockdown and social distancing. So government came in with the social protection to make sure that the poor and vulnerable are bridged into the phase when there will be economic revival. Now we are in what will create the economic revival. And clearly MSME is central to that storyline. So it's this connection of health, social protection, and now the stimulus, which is about trying to get the viable MSMEs the liquidity that they need to actually move forward. As you know, government has introduced quite a bit of liquidity in the market, both through monetary policy as well as fiscal policy. The challenge now is to bring that liquidity down into the hands of MSME. And what government has done is it's created a set of guarantee systems to de-risk the lending into MSME by first moving the money into the hands of NBFCs, small private banks. This is a set of intermediaries that have a relationship with MSMEs, that understand MSMEs, that have been lending to them, and through them, the lending will go into the MSME. That's the channel that is being supported in this part of what, in fact, was the Atmanirbhar Bharat Yojana.
Junaid, we're speaking to a couple of experts, and they seem to suggest that there is a problem in this scheme that has been launched. It's a great initiative. The government recognizing the importance of MSMEs, giving them or making liquidity available to them is great. But the point is, if your banks are not willing to let go of that money and not disperse that loan, if the disbursal does not happen, then there will be this problem. It will not reach the ultimate beneficiary. Do you think that there need to be more efforts taken to convince the banks that you need to trust these MSMEs more and grant these loans?
Well, I think that's exactly what government is trying to do. If you leave the money in the hands of the public sector banks, which don't have the type of deep business relationships with the MSME, the money will not flow, and it shouldn't flow. The banks will be conservative because they don't know this market. So what's happening is you're de-risking first the money that goes from banks into the hands of NBFCs and small finance bank. That's the first part of the de-risking. That's the incentive that's being created. And then the second part of the de-risking is from the NBFCs themselves into the MSMEs. That's their business. That's what they need to grow. So I think government recognizes this, and that's what government is trying to do. Now, you could have done it another way, which is directed credit, get the banks to go into the MSME, start lending. The problem is that you would be putting the burden on a sector of the banking system that doesn't have knowledge of the MSME, does not know exactly how that business works, or at least most of it. So government has correctly said, let me take a bit of the first loss ourselves, not the full loss, but the first loss, a certain amount, so that the NBFCs will still take on credit risk themselves. So this is one of playing incentives and markets to get the money moving. I think this is an extremely important step, rather than what your question implies, that let's do a directed credit. Directed credit would not work. It would put burden on an already challenged banking sector, which has a lot of NPAs. This mechanism, I think, is a very important
mechanism. But Junaid, do you think that this one-time cycle is going to work, where the government says that fine, we'll take the collateral? This one-time cycle is going to work, or do we need like this cycle spread over the next 2-3 years? Because see, in any case, we were struggling with slowdown. MSMEs were the worst hit, and then bang came COVID-19.
Well, I think there are two things here to respond to you. First, government hasn't come up with a scheme. Government's come up with a system to support an ecosystem that's supposed to actually provide resources in the hands of MSME. So it's trying to get a financial market system to open up, number one. Number two, no, it's not a one cycle necessarily. There is a sunset clause, because with guarantee systems, you must have sunset clause. But as we move towards the sunset clause, if we see that the pandemic still continues, that the decline in the economy continues, and good viable MSMEs are moving towards insolvency, then you'll need to have the flexibility to give a second round. And what I like about the way the government has created the system is it offers that option, that flexibility, but it doesn't commit to it immediately, because you want the NBFCs to take their risk. You want them to do the correct credit management in order to get the money down. But no, certainly it is not one of predetermined one cycle.
Okay, Junaid, before we go, my final question to you. You've heard so much in the context of China. I want to ask you this. Can we, in the country, afford a situation, both India and China, can we afford a sort of a situation where we economically distance ourselves from one another? What will it mean for the Indian economy?
Sanket, look, all nations, including mine, Bangladesh, they take decisions based on many factors: political, economic, social. I'm not best positioned to answer a question that has political aspects to it. Let me answer it from an economics perspective. From an economics perspective, our experience as a multilateral, observing growth and poverty reduction over the years, it is clear that an open trading system is the most valuable story for economic growth and for poverty reduction. So we would actually support as much as possible for countries to open. However, for countries to open, it must invest in itself. It must invest in its infrastructure, in its logistics, in its human capital, and in supporting the MSME sector, whether it's through access to finance or access to capacity and markets. If you can get your internal platform strong, then why would you want to give up the ability to go global and to take on the global markets? That would be my perspective in terms of what I would think I hope, is something that we're going to see as a more open market going forward. Because under uncertainty, the more uncertainty there is, the more you need a global market to be resilient.
Nice. Thank you so much. Junaid, pleasure talking to you as always. Country Director of World Bank, joining us right here on Trending Tonight.